Hey everyone, and welcome to This Explainer. I am absolutely thrilled to have you here today. We're going to dive into the truly fascinating journey of a cooperative's year-end profit. We're taking what usually looks like really dry, complicated accounting math and transforming it into a pretty compelling story about community wealth. If you've ever wondered how collective effort actually translates into tangible, real-world rewards, well, you are definitely in the right place. Let's get right into it.
So let's tackle this main question. It's one thing to just say a cooperative made money, but it's entirely another to trace exactly how that hard work turns into shared wealth. To make this super concrete for us, we'll be using the Coastal Fisherfolk Cooperative as our guide throughout this explainer. They've been out on the water all year long, selling fish, providing cold storage, buying supplies. But when the clock strikes midnight on New Year's Eve, where does the money actually go?
To answer that, our journey today is broken down into two major phases. First up is Phase 1, the year-end closing process where we zero out the books and figure out our actual bottom line. From there, we flow right into Phase 2, the allocation of the net surplus. That's where we strategically divide up that newly calculated wealth to make sure we're handling both the community's immediate reward and its long-term survival.
All right, so let's kick things off with Phase 1, tallying the haul.
Taking a look at the trial balance, we can see exactly what went down over the last 12 months. I like to think of income as buckets of water pouring into our boat, and expenses as, well, leaks draining it right back out. Our income buckets, stuff like sales from the fish catch, fisheries inputs, and ice-cold storage services, brought in a really healthy total income of 460,000 pesos. But, as we all know, running a major fishing operation isn't free. Our expense leaks, things like fuel, salaries, administrative costs, and the supplies themselves, drained out 430,000 pesos over the course of the year.
Subtracting those expenses from our income leaves the cooperative with a hard-earned net surplus of exactly 30,000 pesos. And that, right there, is our magic number for today.
The calculation itself is super simple but incredibly powerful. Total income minus total expenses equals our net surplus. This 30,000 pesos isn't just some leftover digit sitting on a dusty ledger. It literally represents the total community wealth generated by the fisherfolk. And now, we need to actively manage, secure, and distribute it.
Which leads us directly into closing the books. Time to reset for next year.
The actual mechanical accounting process to pull off this reset boils down to just two fundamental steps. Step 1, we completely empty all of our temporary income buckets. Step 2, we do the exact same thing for the expense buckets. We wipe the slate entirely clean so the next year can start fresh right at zero. Now you might be wondering, when we empty those buckets, where does the money actually go? We pour everything into what's called the undivided net surplus account. I actually love to think of this as a giant communal net. It gathers all the financial fish caught over the entire year into one central place before they're carefully sorted out and distributed to the village. If we look at the official journal entries, notice how we close the income accounts first. We debit our various income accounts to zero them out, and then we take that total, that 460,000 pesos, and we credit it directly into our big net, the undivided net surplus. Then, we literally do the exact reverse for the expenses. We debit 430,000 pesos out of that undivided net surplus, and we credit all our individual expense accounts, like fuel, wages, ice production, just to zero them out completely. By dumping in 460,000 and draining out 430,000, our giant net is perfectly left holding our true surplus, 30,000 pesos.
And that perfectly sets us up for Phase 2, dividing the surplus. Okay, now we get to slice up that 30,000 peso pie. The thing is, cooperatives don't just guess how to hand out money. They follow very strict percentage rules established by law and by their own bylaws. Check this out. 46.67% goes to patronage refunds, 26.66% to interest on share capital, 10% each to the General Reserve and Education Fund, and a final 6.67% to an optional fund. This highly specific slicing is what balances rewarding the members today with protecting the organization tomorrow.
Let's look at how that actually gets recorded in the books. The official journal entry debits our entire 30,000 peso undivided net surplus. That means we are completely, 100% emptying out the giant net. We then credit those funds into these 5 highly specific reserve and payable accounts, totally based on the exact percentages we just looked at. And when we run the math on those percentages, all those abstract rules suddenly become real, tangible money for the cooperative. From our 30,000 pesos surplus, 14,000 pesos goes directly back to members as patronage refunds, which essentially rewards the folks who use the co-op the most. 8,000 pesos goes back as interest on their share capital. The remaining funds are locked in for the community's future. 3,000 for the reserve, 3,000 for education, and 2,000 for optional local projects.
As our final summary here proves, every single peso of that original 30,000 is meticulously accounted for and purposefully allocated. The undivided net surplus now sits perfectly at zero again, and the funds are safely resting in their respective destination accounts.
All right, let's talk about securing the cooperative's future.
Taking a step back to look at the big picture, these are not just dry, boring journal entries. What we've just walked through is literally the blueprint for securing the community's future. By taking 10% for general reserves and another 10% for education, a full 20% of the profits, the cooperative is acting incredibly responsibly. It guarantees that the community has a safety net to survive a terrible fishing season or, say, a broken cold storage facility. Plus, it ensures they can continually educate and train their members to fish smarter and safer for years to come.
But meanwhile, look at the immediate impact. A massive combined 73.33% is dedicated to patronage refunds and share capital interest. That means the vast majority of the profit goes right back into the pockets of the very fisherfolk who generated that initial 460,000 pesos in the first place. It is pretty much the ultimate example of shared success.
So, seeing how strategically the Coastal Fisherfolk Cooperative manages its hard-earned surplus leaves us with a pretty inspiring final thought. Whether you're part of a business, a neighborhood association, or really any group working together, how does your own community or organization manage and distribute its shared successes? Do you have a system that perfectly balances future security with present rewards? Definitely some food for thought. Thank you so much for joining me on this explainer, and I hope you leave today seeing the amazing stories that are hidden right inside the numbers. Catch you next time.